So what happens when you take two of the most powerful, game-changing technologies of our era, AI and blockchain, and you aim them at one of the oldest, biggest, and, let's be honest, slowest industries on the planet? Well, today we're going to break down exactly that, how this incredible convergence is about to completely overhaul real estate investing as we know it.
All right, let's jump right in. Here's our roadmap. First, we'll unpack the huge friction problem that plagues real estate. Then we'll see how AI is the right now solution to fix it. After that, we'll look at the what's next, the blockchain blueprint for a total rebuild. Of course, we have to talk about privacy, which is a massive deal. And finally, we'll put it all together to see what the investment firm of the future really looks like. So, first things first, let's get a handle on the actual problem we're trying to solve. I mean, how can an industry that manages trillions of dollars in assets still feel like it's running on technology from the 90s? You know, this one sentence just says it all. It perfectly captures commercial real estate today. Every single step, from finding a deal to raising the money to closing it, it's all just bogged down by paperwork, middlemen, and just waiting. And look, this friction isn't just a minor headache. It has huge financial consequences. We're talking about deals that take months to close. Your money gets locked up for, what, 5, 10 years? And that means if you need cash out, you have to sell at a big discount. And on top of all that, all the most critical documents are locked away in these centralized data rooms that are, frankly, a huge security risk. So, how do we even begin to tackle this giant problem? Well, the first step isn't to tear the whole system down. It's to make the system we already have work way, way better. And that's exactly where AI steps in. The idea here is simple, but really powerful. Give every financial analyst an AI copilot. Imagine, instead of spending weeks, literally weeks, manually copying numbers from hundreds of pages of messy PDFs, an AI can just absorb all of it, structure it, and analyze it in a tiny fraction of the time. And this isn't just a theory. Here's how it actually works. The system takes in this chaotic jumble of documents, PDFs, spreadsheets, you name it. It uses computer vision to read everything, even old scanned tables. Then it applies the investment firm's own unique rules and formulas. And then, bam, in just a few hours, it spits out a complete investment memo, ready for the bosses to review. Now, the secret sauce that makes this whole thing trustworthy is a really strict separation of powers. You've got the creative AI, the language model, that acts like a translator. It understands what you're asking for and writes the story. But, and this is key, it never, ever touches the math. All the numbers are crunched by separate, totally auditable tools. This gives you what the source material calls zero hallucination math. Every single number is verifiable and correct. Okay, so AI is amazing for making the old, clunky process faster. But blockchain technology has a much bigger ambition. It's not about streamlining the old pipes. It's about building a whole new financial plumbing from the ground up. The first big concept to get is tokenization. And it's actually pretty simple. You take a physical thing, like a $50 million office building, and you convert the ownership of it into 50 million digital tokens that live on a blockchain. Just like that, a giant, indivisible building becomes as easy to trade as a stock. The next piece of the puzzle is the smart contract. The best way to think about this is like programmable money. It's a contract where the rules are written directly into code. So if the quarterly rent checks come in, the smart contract automatically, instantly distributes the dividends to all the token holders. No waiting, no middleman, just pure automation. And finally, we gotta fix that data silo problem. So instead of one centralized data room, a decentralized system chops up your documents and stores the pieces all over a global network. This creates a permanent, unchangeable archive for your most important records, one that can't be taken down if one server fails or a company disappears. And this is why it's so much more powerful. The old way, in the cloud, is just to make a few extra copies. But this new decentralized approach uses something called erasure coding. It's brilliant. It splits a file into, say, 10 data pieces and 4 backup parity pieces. You can then lose almost a third of those pieces, any 4 of them, and still rebuild the original file perfectly. Your data essentially becomes mathematically indestructible. So all of this sounds pretty incredible. It's faster, it's safer, it's more efficient. But it brings up one giant, flashing red light for any serious financial institution out there. Exactly.
This is the question. This has been the brick wall for so many of these projects. You just can't have a multi-billion-dollar fund's entire playbook. Every move they make, who their investors are, broadcast for the whole world and all their competitors to see. It's a complete non-starter.
So, how do you solve it? Well, with a toolkit of some seriously advanced cryptography. First, you have zero knowledge proofs. They let you prove something is true, like say, I have enough money to make this investment, without actually revealing how much money you have. Then there's something called fully homomorphic encryption, which lets you do math on data while it stays encrypted. And finally, threshold cryptography splits the decryption key so no single person can unlock the data alone.
And this brings us to a really crucial distinction. The goal here isn't to be anonymous, it's to be confidential. In this kind of system, regulators can still see everything they need to see to make sure rules are being followed. But your strategy, your portfolio, your clients, all of that is cryptographically sealed off from the public and your competitors. It's the best of both worlds, surgical transparency. So, let's put all these pieces together. What happens when you merge that incredibly efficient AI brain with this new, secure, and private blockchain foundation? Well, you don't just get a faster version of today's investment firm. You get a whole new kind of company, one that can create totally new kinds of products. For starters, your data room is no longer just a cost. It becomes this permanent, super secure vault. And because you can now grant secure, permissioned access to anonymized data from that vault, think foot traffic patterns or energy usage, your data room can actually become a profit center, generating cash from its own data exhaust. Second, you can create what's called a liquid capital stack. You can build things like decentralized REITs, which are like mutual funds for buildings. This lets anyone invest with as little as $1,000 and get their dividend payments sent to them automatically. This just blows the doors open to a much wider pool of investors. And third, you get programmable debt. You can create a smart bond that's directly connected to a building's live performance data. If the income drops below a certain level, the contract can automatically enforce protections for the lender, not months later in a report, but the second it happens, in real time. So what's the financial impact of all this? It's huge. Just by making a building, a traditionally very illiquid asset, tradable 24/7, you unlock what's called a liquidity premium. And the research suggests this alone could boost an asset's value by a staggering 20 to 30%. And if you look at a model of what this looks like for a firm, the numbers really speak for themselves. Yeah, there's an upfront cost, but the payback period is just about 2.5 years. By year 5, the firm is throwing off nearly $500,000 a year in extra cash flow, just from being more efficient and creating new revenue streams. So in the end, this whole technological shift, it's about way more than just making finance more efficient. It fundamentally changes what it means to own property. It could potentially open up the world's largest asset class to everyone, which leaves us with a really big question to think about. When buildings become as easy to buy and sell as stocks, what does that mean for the future of wealth?